Hello and welcome to my look at how to trade the news. Now, there are a lot of questions out there when it comes to trading the news, and there's a lot of interest. And this is mainly due to the way trading used to be. However, there are some things to pay attention to when trading the news and some things to give serious thought to as to what you're truly putting yourself through. When you trade the news, you are going up against thousands, possibly tens of thousands, if not hundreds of thousands of participants around the world. And this crowd, there's all these people out there trading all around the world in Australia, Japan, United States, the Bahamas, South America, Scotland, whatever. And you've got this pool of people out there that are trading the same news event, if it's a large enough news event. Well, by saying that if, for example, GDP comes out lower in the US than X, meaning I'll place this variable of trades, or if it comes out greater, then set up Y, okay? Now, a lot of people will look at it like that. The problem is the market doesn't always do what you want to do. The first problem you run into is, and I'm sure if you think about it, it's not real hard to imagine this. You have all of these traders around the world with different needs, ways to read the news, different reactions. So by saying that you want to trade because of the number being high or low, and just based upon that, what you're basically saying is you can read the minds of thousands of traders simultaneously around the world and how they're going to react, because you're assuming that they will do whatever it is you anticipate that a good or bad number does. But you have to realize there's hedgers out there. There's people that are entering the market because they have to hedge, and they just happen to do it at that moment in time. They don't really care about the fluctuation. There's lack of liquidity. There's a million different reasons why they may place a trade. Plus, now, over the last, say, 10 years especially, there will be a news event, and that news event will be picked up by a computer, and it will place a trade. And that trade will be purely algorithmic. And there's a real problem with that, and that's something that's really kind of reared its head over the last couple of years, and I do anticipate that this will change. The algorithms are being tricked all of the time. There are algorithms out there that will react a certain way to a number, and those, again, may have that X and Y variable set up to the GDP figure, which makes a little bit more sense. But now we even have algorithms that react to Federal Reserve speeches, for example, and it'll pick up on a key word. And in this case, for this example, let's say the word is inflation. Well, inflation typically means rates are going higher, and it starts buying the US dollar. The problem that the algorithms can't tackle quite yet is the fact that it might be Jerome Powell or a governor saying something about inflation in like an anecdotal story, or it may talk about how there's no real concern about inflation right now, but all this thing sees is the word inflation, and it places that dollar long, which makes no sense. It gets tricked. So that's another problem you have with trading the news. Really, in order to trade the news, you need to have a major miss. And today's economists are pretty good about being pretty close to the news coming out. So using a GDP example again, let's say that it's anticipated to be 1.9% in America, and it comes out 1.8. Well, I mean, that's a miss, and that's negative for the dollar, at least in theory. But what happens sometimes is people will say, okay, well, that's still better than Europe, so I'm willing to sell the euro against the dollar. Or maybe they become concerned. They start buying the dollar because they want to buy U.S. treasuries. You have to switch into the U.S. dollar to do that from Saudi Arabia or Brazil, wherever you happen to be trading from. So that's dollar positive, even though the announcement's dollar negative. You see where I'm going with this. It's just simply a big bundled mess. So really what you need is some type of significant miss. So instead of a print of like 1.8, a print of like 1.3 would be a huge miss. And that is much more dollar negative in general. That gets enough people scared. These 0.1% type of misses, they do nothing but cause trouble. So the main takeaway from this is trading the news really doesn't work anymore, at least not the way it used to. There is a way you can trade it though, and there was a news event here, and I'll leave it up to your imagination in the dollar CAD because it really doesn't matter what the news event was, but it was an announcement. The announcement was obviously either bearish for Canada or bullish for the US dollar, or a safety trade, if you will. You can see that there's a lot of support here, and an hour later they finally broke through that support. You can see that they shot straight to that support and bounced pretty significantly during the next candle and broke down again. So really the main takeaway here, the way to trade the news, will be notice your support and resistance and see if you close below it on a candlestick from your time frame. Well, that's exactly how we trade technical analysis anyways. That being said, you have to keep in mind that trading the news is a quick way to make or lose money, and time is not your friend, meaning that the more times you do it, the more likely you are to blow up. It was a great marketing scheme in the late 90s, early millennium. It's probably something that you should avoid. You're going up against computers that react instantly and not necessarily rationally.